Welcome to our PowerPoint presentation, Accounting and Bookkeeping, Cash Flow, Profit and Loss, and the Balance Sheet. The importance of keeping adequate records cannot be expressed too much. Without records, you cannot see how well your business is doing and where it is going. At a minimum, records are needed to substantiate your tax returns under federal and state laws, including income tax and Social Security laws, your request for credit from vendors or a loan from a bank, your claims about the business should you wish to sell it, and most important, you need them to run your business successfully and to increase your profits. You can click on the following website for further information on your bookkeeping needs. QuickBooks has become a very popular accounting tool for the small businesses, and you can go to www.quickbooks.com. You can also click on our links button, and that would take you right to it. Improving receivables. The basic idea is to improve the speed with which you turn materials and supplies into products, inventory, and receivables into cash. And here are some specific techniques for doing this. Offer discounts to customers who pay on time. Ask customers to make deposit payments at the time the orders are taken, and require credit checks on all non-cash customers, and get rid of old, outdated inventory for whatever you can get out of it. And issue invoices promptly and follow up immediately if payments are slow coming in. And track accounts receivable to identify and avoid slow paying customers. Managing accounts payable. When you are managing a growing company, you have to watch expenses carefully. Anytime you see expenses growing faster than sales, examine costs carefully to find places to cut or control them. And here are some tips for using cash wisely. Take full advantage of creditor payment terms. Use electronic fund transfers to make payments on the last day they are due. And communicate with your suppliers so they know your financial situation. And carefully consider vendors' offers of discounts for early payments. And don't always focus on the lowest price when choosing suppliers. Sometimes more flexible payment terms can improve your cash flow than a bargain basement price. Cash flow shows the movement of the cash through your business over a period of time. It is a forecast of the future flow and usually done for the upcoming year. As each month goes by, the actual cash flow is recorded next to the projected cash flow, and the cash flow will predict for you the highs and lows of available cash for your business. And what it is good for. Projecting what will happen in the future, showing you when you may need to reduce expenses, boost sales, or seek a short-term loan in order to get through a slow time in your business, and measuring your actual progress month by month in comparison to your cash flow projections. The profit and loss and what it shows. The profit and loss shows whether your business made a profit or a loss over a certain period of time in the past. This statement is also sometimes called the P&L or the income statement. And what it is good for? It provides the information for your income tax statement, your Schedule C. It shows if you can actually make money doing this business or not, and it's a trend analysis. The balance sheet and what it shows. The balance sheet is a summary of the overall financial condition of your business on a particular day. It is like a photograph or where your business stands. It summarizes what the business owns, what you have invested in it, like assets, liabilities, and net worth. And it shows the sources and uses of funds. And what it is good for. It has the items you need to figure out the depreciation on items the business owns, which is necessary for your tax return. And lenders often want to see the balance sheet to see what the business owns, outstanding loans, and the capital you have invested. It is the way auditors, accountants, and yourself can check to see if your ledgers match. You should prepare and understand the two basic financial statements needed: the balance sheet, the income, profit, and loss statement, a summary of your earnings and expenses over a given period of time. This now concludes this session of our PowerPoint presentation.